Did you know that someone once successfully wrote off their cat as a business expense? And no, I'm not talking about a pet store owner. I'm talking about a regular person who found a completely legal loophole that saved them thousands of dollars. But here's the twist that will blow your mind. The IRS actually approved it. Welcome to the absolutely insane world of tax deductions, where the line between genius and madness is thinner than your patience during tax season. I'm about to reveal 10 of the most bizarre, shocking, and surprisingly legitimate write-offs that real people have claimed. Plus, some outrageous attempts that landed folks in hot water with Uncle Sam. But first, let me ask you something. How much money do you think you're leaving on the table every year because you don't know about these hidden deductions? The average American overpays their taxes by over $3,000 annually. That's a vacation, a down payment, or 6 months of groceries just sitting there, waiting to be claimed. Today, we're diving deep into the rabbit hole of tax law to uncover deductions so weird, so unexpected, that you'll question everything you thought you knew about the tax code. From bodyguards for pets to professional witch expenses, we're covering it all. And trust me, by the end of this video, you'll never look at your receipts the same way again. Let's start with something that sounds completely made up, but is absolutely real. Pet protection services. A business owner in Texas successfully deducted the cost of hiring security for their guard dog. Not security for themselves, mind you, but for their dog. The reasoning? The dog was essential business property that needed protection from potential thieves who might steal or harm their four-legged security system. The IRS examined the case and determined that since the dog was legitimately used for business security purposes, protecting that asset was a reasonable business expense. But wait, it gets weirder. A cat named Morris became a tax deduction for a scrapyard owner who claimed the feline as pest control. Morris wasn't just any cat. He was documented as the official mouser with detailed records of his pest elimination activities. The owner provided evidence of reduced pest control service costs and improved inventory protection. The IRS actually accepted this deduction because the cat served a legitimate business function. Now, before you run out and adopt every animal at the shelter, remember that documentation is everything. These weren't just beloved pets. They were working animals with clear business purposes and detailed records proving their value. Moving from animals to appearances, let's talk about one of the most controversial deductions in tax history. Cosmetic surgery write-offs. A professional dancer successfully deducted breast enhancement surgery, arguing it was necessary for her career advancement. The key factor? She could prove that the surgery directly impacted her earning potential in her specific profession. Similarly, a bodybuilder wrote off various cosmetic procedures as business expenses, providing evidence that his physical appearance was directly tied to his income from competitions, sponsorships, and personal training clients. The courts supported these deductions because they met the crucial test of being ordinary and necessary for the taxpayer's specific trade or business. But here's where it gets tricky. A regular office worker tried to deduct a nose job, claiming it would boost their confidence and career prospects. This was rejected because the connection between the surgery and their specific business needs wasn't clear enough. The lesson? Context and profession matter enormously. Let's shift gears to something that sounds like a movie plot: bodyguard expenses. High-profile business executives and celebrities regularly deduct personal security costs, but the rules are surprisingly specific. The security must be necessary due to business-related threats, not general paranoia or lifestyle choices. One entertainment industry executive successfully deducted their entire security detail after receiving credible threats related to a controversial business decision. However, a wealthy entrepreneur who hired bodyguards simply because they felt important was denied the deduction. The difference? Documented necessity versus personal preference. Here's something that will surprise you. Professional witch and psychic services can sometimes be legitimate business deductions. A marketing consultant wrote off payments to a spiritual advisor, arguing that the sessions helped them develop creative strategies for clients in the wellness industry. The key was proving that the expenses were directly related to their business operations and income generation. But don't think you can just claim any spiritual service. Someone tried to deduct their weekly tarot card readings as research for their accounting business. That didn't fly because there was no logical connection between fortune-telling and financial services. Now let's talk about one of the most audacious, successful deductions ever: a swimming pool. A taxpayer with severe arthritis got their doctor to prescribe regular swimming as medical treatment. They then successfully argued that installing a pool was a medical expense necessary for their prescribed therapy. The IRS initially challenged this, but eventually accepted it after reviewing extensive medical documentation proving the pool's therapeutic necessity. Similarly, someone deducted a hot tub as a medical device after their physician prescribed hydrotherapy for a chronic condition. The key was having proper medical documentation and using the facility primarily for treatment rather than recreation. But here's the flip side. Countless people have tried to deduct pools, hot tubs, and gym equipment as medical expenses without proper documentation or medical necessity. These attempts usually end in audits and penalties. Moving into more unusual territory, let's discuss the infamous case of someone deducting their child's clarinet lessons as a medical expense. Their orthodontist had suggested wind instrument practice to help correct their child's overbite. With proper documentation from the dental professional explaining how playing clarinet would improve their child's dental health, they successfully claimed the music lessons as a medical deduction. This opened the door for other creative medical deductions. Dance lessons for a child with coordination issues, prescribed by a pediatric therapist, became a legitimate write-off. Art supplies for someone undergoing art therapy for mental health treatment also qualified as medical expenses. Here's one that shocked even seasoned tax professionals. Beer as a business deduction. A hair salon owner discovered that beer was an effective hair conditioning treatment and began offering it as a service. They successfully deducted cases of beer as business supplies, complete with before and after photos documenting the hair treatment results and customer testimonials. But before you start expensing your weekend brewery visits, remember that this worked only because the beer had a legitimate documented business use beyond personal consumption. Let's talk about travel deductions that push boundaries. A travel blogger wrote off a luxury cruise, arguing it was research for their audience. The catch? They had to prove business purpose by documenting their work activities during the trip, publishing content about the experience, and showing how it generated income. Someone else deducted a cross-country road trip to visit relatives, successfully arguing it was business travel because they conducted client meetings in each city they visited. The key was having scheduled business activities and documented income from those meetings. But many people try to disguise vacation travel as business trips without any legitimate business purpose. These attempts usually result in denied deductions and potential penalties. Now, for some spectacular failures that will make you cringe. Someone tried to deduct their daily Starbucks coffee as a business meal, claiming they conducted business while drinking it. Without documented business meetings or clients present, this was easily rejected. Another person attempted to write off their entire wardrobe, arguing that clothes were necessary for work. Unless you're in a profession with specific uniform requirements or your clothing has business logos, personal clothing isn't deductible. One of the most outrageous attempts involved someone trying to deduct their wedding expenses as a business event because some guests were clients. The IRS definitively rejected this, ruling that personal celebrations remain personal regardless of the guest list. Here's the reality check you need. The IRS has seen every trick in the book. They have sophisticated systems for detecting unusual deduction patterns and experienced auditors who can spot questionable claims instantly. Successful unusual deductions all share common characteristics: clear business purpose, thorough documentation, and logical connection to income generation. The taxpayers who successfully claimed bizarre write-offs weren't trying to cheat the system. They were following the rules in creative but legitimate ways. The key is understanding that deductions must be ordinary and necessary for your specific business or circumstances. Ordinary doesn't mean common. It means reasonable for your situation. Necessary means helpful and appropriate for your business, not absolutely required. Documentation is your best friend. Keep detailed records, photographs, receipts, and any supporting evidence that proves your deduction's legitimacy. If you can't explain why something is deductible in simple, logical terms, it probably isn't. Remember, being aggressive with deductions isn't inherently wrong, but being deceptive is both illegal and expensive. The penalties for fraudulent claims far exceed any potential tax savings. So what's the takeaway from this journey through tax deduction wonderland? There are legitimate opportunities to reduce your tax burden in ways you might never have considered. But success requires careful planning, proper documentation, and honest evaluation of whether your situation truly qualifies. Before claiming any unusual deduction, consult with a qualified tax professional who can evaluate your specific circumstances and ensure you're staying within legal boundaries while maximizing your legitimate savings. What's the strangest legitimate expense you think could be tax deductible? Share your thoughts in the comments below, and don't forget to subscribe for more surprising financial insights that could save you thousands.